18-minute opening bell, 2/6 of 2012. And what we would like to point out to MMTs is the 20 minutes is just a couple minutes away, and we put 30 highs in Google. How nice. And that transaction meant from 594.01 to the current exiting is how you make money. And not only that, when you make a market, because the close was 596.33, and they drop it to 594.01, but you're making the higher highs from that wholesale entry here. So what I would like to show is that there are put options on it as you go up to resistance level intraday. At some point, we are going to continue to make higher highs. Right now, you got a 47 highs in 19 minutes between the buyer and the seller, MMTs. Obviously, the buyer has control. Look, see the prices? Isn't that nice? Now look at the highs. They peaked at 50, so you can see that. And you can see that happening in 19 minutes. 2/6/2012. Okay, MMT, show me that bid price that I was talking about. Cancel all. Cancel the 880 for now on the 600 put, and let's start scaling that up there at resistance. Put these out at 6.7, because if we break through that 599.65 area on the upside, and we're 20 minutes into the opening bell in price action, how to identify it, how to execute it as a market maker, and then ring the cash register. That's $4 off the low, no matter how you look at it. So here we have the reversal confirmation on Google from 602.81 to the current $1 ratio. We have 461.28 ratio high to the 460.94 Pineo ratio, bid and ask between buyer and seller. 30 minutes opening bell has taken place. So basically, when you take a look at the low entry, as MMTs are taught at that support level, then they walk that up to a 30-minute intraday high. Chipotle Mexican Grill right here in its first 30 minutes is that it makes this high, then the bids have been selling down. That means that reversal and the identity of that high was up here at the teeny line. There is the teeny reversal, so you would want to go 1, 2, you're right here at your diamond support level, and what you're looking for is the 3 teeny reversal. See how they dropped it right to the teeny line in your platform? Not only that, in this particular structured trade is how that top, that this price has dropped below this teeny line. It wasn't like it sold through it. You had that support bar that I had showed right here, but then the next print is that they marked it down here to this level. Now, when you take a look at that opening bell, as you take a look at that, how that top is put in, and how the 3, 5, 7, 9 teeny reversals may or may not happen. However, 0.38 was your high. That was a fairly decent move for CMG. $2.73 on that high right there at 0.38. Now, the current ratio is weak at 0.8. That's a 30-point drop in your ratio here. That's why you dropped and tested this half bar on CMG at 372.88. Now, when CMG does come down in here into the lower support level and breaks below it, once you're confirmed the half bar here on CMG is what the price spread is, 32 cents. Now, what will happen in this bid and ask ratio is if they're printing down the bid in the level 2, you would see 4 print on this side. If they're trying to walk it and get it stronger, you would see the higher print, and it would show up. So like 8 was the last print. So when it prints 5, that means it's weak. Watch your bid and ask ratio. That's the spread, the last spread print between our bid and ask ratio. And when it goes lower or higher, you're at 12, so you can see why you're holding price support. And you can see where your diamond support levels are right through here. And you can see that the amount of 1, 2, 3, 4 teenies to the half bar right here, 372.88. Now let's spend some time on it. Your 372 bid 78 by 373.15. That is very nice to know that that's your half bar, because if you bounce or you buy that, you want to see the price advance above your MMT half bar relative to the bid and ask structure. Okay, and you want to see that number here that my pointer is, so 373.06. Well, we know that the half bar is right here. We know that, and that's 372.88, and we're holding that right now, and we can see clearly that it's a 2 teeny bar. 1, 2 times 45, that's 90 cents. Now when we come back up here to the higher diamond level, as we move forward, and we can take a very light trade. If we come up here and test these diamonds, we're headed that way. We could put a short sell out there at, let's say, well, they just printed 373.68. Put a short out there at 374.87 cents on 50 shares and work with this movement right here on that opening bell, squaring the opening bell in a 35-minute print right up to that resistance level. And what are we here to do? We're here to make sure that people enjoy what they do, but then that this is very strong IR, and you're at 0.23, and that's why you bounced 1 teeny, 2 teeny, 3 teeny movement. Now, this is live, and this would factor in any technical analysis that you could ever want to use over here, under here. Yeah, this price does not lag. Now, having said that, that's because it's high frequency volume machine that made that wind up in our system. 1 teeny, 2 teeny, 3 teenies at 45 pennies teeny, and then weakness comes right in here. That's why I said take the 50 shares up there. You waited for that 3 teeny test. This is always the right thing to do to scale into your entry, that you did not short the bottom at 372.50, but rather had put the limit order execution out above the marketplaces in the diamond areas, and the test was that they've come up here, they are verifying that reversal below that diamond. The time is 7:06 a.m. 2/6/2012, Chipotle Mexican Grill. And one of the things that we look at, that's your half bar here, and it's holding this half bar. Look at that double diamond support level. And look at that right there. This is that opening bell. So here, let's take a look at it. Here it is. There's the top. There's the diamond structure coming right up. That is breaking higher. So now you've taken out the intraday high. And we are now printing at what? No, we did not yet. How about that? We got right up there close to it. 374.62. And this is why I say, by being patient and never short the bottom, but put them back up here, like I said, until it proves otherwise. I said 374, I think 87 pennies. Okay? Because that was the safest limit order transaction submission to the marketplace called direct access. And once again, the reversal is here. It tested it. This is where having the limit order, when you're down here, whether it goes up there or not, is having that limit order out there below those highs so that when you get that 3 teeny spike, but look at, let's see if it holds the half bar between the two diamonds here. Okay, and that's a narrow range, and it happens to be a 1 teeny, 2 teeny, 3 teeny, right to the teeny. Yes, it is. And that's what it is. That's that script, MMT, and that's what's going on in CMG. It's a script. It's don't ignore the 3 teeny, please. 1 teeny, 2 teeny, 3 teeny. Now watch. 1 teeny, 2 teeny, 3 teeny down. Okay? Now watch. 2 teeny script back up. Now, and you're up toward the high. This platform tells the truth about having that limit order out there at 374. I think I said like 87 pennies. Until I'm proven that there's going to be a reversal, I still remain a dollar bid and ask. So my bid to the intraday high is a little bit, not even quite a dollar. You can see it right here. So that's how you look for breakouts as well. Because, like I said, it has 32 highs. So that's how you learn to limit in an order, MMT. When you had the first reversal, you don't short here because there is a reversal that happens right at the bottom, and then they walk it right back up into 369. So here's your reversal, intraday high, support level, right here at this half bar as well. And that held at 372.88. This half bar level is 373.38 right here. And you got rising 10-minute. And that's how you trade the opening bell. And I just wanted to cover it because you have to be patient in these illiquid stocks like CMG. And another thing, if I'm going to trade the put, well, what am I going to do? I'm going to go to the 375 because that's going to make me the most money, or 380 in the money weekly. Right here. Cut bingo. I got to put it somewhere. So here, why don't we put it? That's a 360 call. That's on that Apple. I've been watching. We've had that, but it doesn't do much. Now watch. Let's go to CMG for. Let's see what we have. Show all. And let's go to a higher, that's that CMG 360 call that we had buying off the bottom. And that by buying the calls off of the bottom was a good thing to do with CMG during the earnings. What we do have available for this trade, CMG, is a 380 put that has been marked down from 1160 to 950. There still are very low market levels that it can go to, and it can find a market level. However, that would be the one to trade because it's in the money, and the high was about almost half of the strike price, 374.92. 375 is half of that. 380. So as long as you're trading below 375, this is going to make markets at wholesale bids. And then the ask will go higher. Once you get entry on your wholesale bid, then you go over on the ask. And when the tick is going in your favor, you execute for your profit and have the public pay you what you deserve. So that's that 380 put on CMG. I'm going to conclude that the Amazon was a short. Okay, I'm going to conclude that entries on shorts is not shorting the first pass. It bounces, let it bounce, let it test, let it roll over. We've got reversals here on Google on the opening bell, and and we've almost got 45 minutes in price action. And Google has a very nice rhythm to it because it went straight up and it made the highs as it did. So we know that part of it. And here's what the reversal looks like on Google on the opening bell. So far, MMT, you can take a look at where your platform was working here. You put the highs in the CMG. Now, when I pull that Google chart up there, you're going to see the same identical path just about between your lows and your highs and your gaps. Okay? So take a reference of that last shot. Now, when I blow up this candle on the reversals, when you take a look at the reversal, you'll take a look at Google's reversal and like the CMG reversal that I was just showing you. I'm going to show the reversal right here. And I'm going to populate the delta there. Now that I've done that, we've got the reversal, and reversals start Tina, 1 teeny, 2 teeny, 3 teeny, 4 teeny, 5 teeny line. Half bar is that jeopardy. We know that. When we look over here at the half bar value at 606.27, and you're 606.34 by 47 pennies. So you're right here at that major topping reversal pullback. That's 5 teeny pullback to the half bar. And as long as you maintain the closing level above that number, then the pullback would be strong, as we are right here. The put side, the 605s hit 480. They finally made a bottom on a weekly. The 1219 was the high of the intraday. And so basically when we look at a $600 put over here on a 218, we're just looking to see that that's 570 by 590. It does have a bottom at 530. Take a look at the high. They marked it from 11 down. Now, we found support right in this area in the first 45 minutes in price action, MMTs. So basically, when you look at the lower tier level, you're going to know what your half bar here is, and I can show you, is that this half bar here is going to be 605.10. All right? That's going to be your next lower level of support. In the short term, you're going to be watching the 606.27 half bar, which is in your info panel down here. And you'll be able to see that there in your panel. And another thing you want to know is you always want to know if the half bar is starting to close below the previous bar. So like right here, this bar right here was 95 cents lower than the original reversal bar. So you take the reversal bar and then you look at it, it tells you 95 cents. So that was a short-term top reversal at that 608.40 level. And this is where the ascending breakout in the diamond alert had occurred in the SMF platform.